Steve de Jong here, CEO of VRIFY. I have the CEO of Newcore Gold with me today, Luke Alexander. Luke, thanks for joining me.
Yeah, great to see you, Steve. I hope you're having a nice summer.
Yeah, it's great. Calling from the, what do we say, our satellite office from Hornby Island today. Thanks for taking the time. So Luke, you and I have known each other going back, 10, 12 years, brings me back to my days when I was trying to pretend I knew what I was doing as the CEO of a gold company. And you were working institutional sales in London and would tour us around, introducing us to all the big investors. Your own background and I guess career trajectory has been kind of fun to watch, coming from the sell side on the institutional sales desk over to CEO of a junior gold company. Before we get into the Newcore story, I'd love to hear just a little bit about your experience, what that's been like, kind of going from one side of the table to the other.
Yeah, so I guess maybe just for a bit of background, so I spent the first kind of 15, 20 years of my career on the investment banking side of the business, 12 years in London. As you mentioned, that's where we got to know each other, really advising, primarily mining companies, ASX, TSX, London listed companies on different kind of transactions around the world, helping raise money for those companies to ultimately advance their projects. Through that, I got to work with a lot of very successful mining entrepreneurs over the years and different executives from lots of different companies. So was very fortunate to learn a lot through all of those meetings and experiences I had working with those groups and visiting projects around the world. That's obviously where we got to know each other, and Integra Gold was a huge success. So kudos to you and George and Andre and the rest of the team for that success. I've kind of spent my career, as I mentioned, working with different mining entrepreneurs. A couple of those individuals, Doug Forrester, Blaine Johnson, they're the ones who were founders of Newcore Gold. We had worked together closely on Calibre Mining, which was one of the companies they also co-founded, and then approached me to become CEO of Newcore Gold. So that's when I left the investment banking side of the business and moved over to the corporate side. So been doing this role for about 3 years, and it's been great. I mean, obviously, I'm leveraging my experience with the capital markets, and that's really a big part of my focus is on making sure that the company's funded, that we've got good coverage from a research perspective, good liquidity in the market, all of those key things. And then, important to recognize that I'm not a geologist at the end of the day. So we're very fortunate to have had Greg Smith, who's our VP Exploration, come back and join at the same time as when I joined, and he's leading our exploration efforts, as well as Mal Carvasca, who's heading up our business development, investor relations side of the business. So, we've got a great team who's pushing the project forward in a great jurisdiction. And again, leveraging those capital market skills has been a big part of my focus.
And so, Luke, when I think back to those days, we were sitting in the $1,000 to maybe $1,200 an ounce gold range, and we used to sit there and kind of go market and meet with investors and just talk about one day gold's going to be at $1,500, $1,600, and it's going to be this kind of utopian resource market that we've all been waiting for, and kind of we've all gone through the trenches to get here. Here we are at $1,900, sitting between $1,900, pushing $2,000 gold. I'd love to hear your thoughts, just as someone who had spent their career talking to investors all the time and is now sitting on the other side. We seem to have the gold price that we always wanted for. We don't have the gold resource market that we thought would accompany it. I'd love to hear your thoughts on why that might be and what needs to change.
Yeah, so absolutely. I mean, gold's pushing $2,000, and I think everyone thought that the junior sector and the overall gold sector would be pushing all-time highs as a result. The one thing that I kind of point to is, yes, gold is pushing all-time highs, but all-in sustaining costs are also pushing all-time highs and are at all-time highs. So the inflation that we've all seen at the grocery stores over the last couple of years, I mean, that's had a meaningful impact on gold companies around the world and mining companies around the world, and all industries around the world for that matter. So if you look at Newmont, for example, I use them because they're the largest gold company on the planet. If you rewind and look at some of their forecasts for all-in sustaining costs a few years ago, they were talking 1050 to 1150 all-in sustaining costs. You look at that today, and it's gone up by about $200 to $250 from that perspective. So it's the margin that gold producers are making that's less than we were seeing a few years ago. And as a result, that free cash flow and earnings is impacted by the fact that costs have gone up in tandem with the gold price. So when we saw gold prices hitting all-time highs 2 or 3 years ago, that's when we saw the company's share prices hitting all-time highs, and that a lot of that margin has been squeezed because of the rise in prices. If you start to look at a number of companies and their forecasts going 2 or 3 years out from now, they're starting to see, or at least predict, peak all-time sustaining costs and peak inflation. So we could actually start to see in the next couple of years things either flatten out or actually start to come off. Again, if you look at Newmont, biggest company out there, they're actually predicting all-in sustaining costs coming off over the next couple of years, which will then create margin expansion. So I think we're at a very interesting point where margins have been squeezed, but we could start to see them expand over the next year or two.
Yeah, and it's an interesting one because you sort of have this sentiment at getting probably close to all-time lows, but you have that commodity price, that underlying commodity price, and within that creates opportunities because there are some real nuggets, companies out there cashed up, ready to go, that are getting completely ignored or undervalued because they're just a gold company in this market, and the macro conditions that you're describing impact everybody. And we often, I think, probably as an industry, as anyone involved in the investment community, we try to overpredict, analyze what's going to happen next, when the reality is all of a sudden one day we'll wake up and sort of those losers will be winners. And it's really going to be the companies, I think, that have cash, have advanced their projects through this times, that will be the first movers when that actually happens.
Well,
which brings us, I guess,
one of our largest investors who I was out for lunch with a few months ago, he said to me, he goes, "Luke, you guys have kind of done everything you said you would. You've delivered from a drilling perspective, economic studies. You grew the shareholder base to 45% institutional ownership, brought 5 investment banks on from a research perspective, increased liquidity, all those kind of key things that you need to push a company forward." And he goes, at the end of the day, companies will go up 400% and they'll come down 80% for no other reason than market sentiment. And as you've kind of touched on with a couple of your comments just now, is market sentiment is very tough for the for the gold space and for the mining space as overall. And as a result, stocks have kind of come off significantly in the face of that. It doesn't take a lot to move the precious metal sector. Fund flows, by generalists back into the sector can all of a sudden re-rate them by 400%. But at the moment, we're in a period of the market where we're seeing them off 80%, back to that kind of example that I'm using. But these are the times where a lot of money can be made by investing at the bottom, when there's blood in the water and nobody else cares about the segment of the market that has been most impacted.
Yeah, it's such a good point too. When you talk about fund flows, and obviously it's something you have a lot of experience with, spending a big part of your career in dealing with investors, is that the gold market, the resource market in general, is so small, minuscule compared to the big kind of overall investment ecosystem. When you look at some of these multi-billion, even trillion-dollar funds, and they go from 1 to 1.2% allocation to precious metals, that equates to tens and hundreds of millions of dollars being invested back into the sector. And it doesn't take much to move it. It's pretty big when that happens, but kind of just going back to it, there are companies that have advanced a project that all of a sudden the world will wake up and say, oh, this is one of the ones that actually should be worth a lot more than what it is today. I personally, given sort of my own investments and sort of work that I do in the sector, cannot wait for that day. But whether it's tomorrow or kind of a month from now. I hopefully it's one of those two things. Yeah, to be determined. Let's get a little more into Newcore Gold specifically.
From your mouth to our share price, Steve. So we're looking forward to that as well. And one of the key things is through these tough times is to make sure that the company remains funded, that the management team's disciplined about allocation of capital. And again, we're very fortunate at Newcore to have 45% institutional ownership. And also, management and directors, we're very well aligned with shareholders. We own 21% of the business, and if you go look at the filings on the back of this recent financing that we've done, you'll see that that the board and management participated in a significant way in this recent financing as well. So we continue to put our money where our mouths are and continue to back the company from that perspective, because we recognize the huge value that there is within our Enchi project, and now's the time to be deploying capital in a market that has been out of favor for a number of months, if not years.
Well, let's get a little more into Newcore and Enchi. Luke, I've told you this before. VRIFY as a company has, for the last 4 or 5 years, we've built this 3D interactive presentation tool, but oftentimes people see it and then they say, I'm not really sure how I use it or what to do with it. But I would say, right up there with the best of the best from the VRIFY power user community. The number of individuals, and this is investors and others, that have said, I didn't really understand VRIFY, and then I saw Luke and the team at Newcore present, and now I understand it. I'm really looking forward to this, not only to learn more about the Newcore project, but also just to walk through this in person. I haven't gone through a VRIFY presentation with you and for probably 2 years now. Yeah, why don't I'll hand it over to you, and why don't you start taking us through the project? Start high level with Newcore, Enchi, and then I've got some specific questions, but I'd love to see you take us through that content.
Yeah, sure. Yeah, thanks, Steve. And I guess, just at a high level, we find VRIFY hugely useful because you can take people from obviously a PowerPoint presentation into a 3D model, into photos, and spin them around our asset back out to PowerPoint 3D. So it's a much more interactive, immersive way to present. And also I find it real useful because as questions come up, we can easily guide people through the presentation, which, when you're looking at a 30 slide PowerPoint deck, it's sometimes tough to do. So in terms of Newcore, we've got a proven management team with a track record of success. Obviously, as I just mentioned, 21% owned by management and directors, and importantly, this is money that we've invested alongside investors. So we're not a company where we gave ourselves a whole pile of stock at half a cent a share and then asked investors to come in. We've written checks alongside investors all the way through. The asset sits in Ghana, which is a great jurisdiction, and it's fundamentally underpinned by a resource that we put out, as well as a very robust PEA. So I can get into a little bit of that. ESG is core for us. Our view is that all stakeholders need to benefit in a project, and that's the best way to ultimately push it forward. I think I talked about my background and some of the team. I won't dwell on that too much. From a capital markets perspective, as I highlighted, 45% institutionally owned. So these are deep-pocketed, long-term focused investors who recognize the tremendous, value that there is within Newcore, as well as very well covered from a research perspective. So that's a great thing as well. Ghana, it's Africa's largest gold producer, 6th largest gold producer globally. So it's a great jurisdiction to be operating. But at the end of the day, what I always tell investors is, don't listen to me, the CEO of a single asset company who's biased from that perspective, but look at what the majors are doing in country. You've currently got 3 of the top 10 largest gold producers operating in Ghana. Newmont, as we all know, is the largest gold producer on the planet. They're in the process of investing another $1 billion into Ghana, and that will take them from 14% to roughly 20% of their global production coming from Ghana. So for the largest gold company on the planet, who can allocate capital to any jurisdiction, any country in the world, I think that speaks for itself that they're willing to have 20% of their global production coming from Ghana. We're situated on the Sefwi Bibiani Belt, great neighbors along trend from us, multiple 5 million ounce plus deposits, and we've just scratched the surface. To date, the average vertical depth of our pits is only down to about 70 meters. So lots of exploration upside from there. Getting into the project itself, sometimes people think, oh, Africa, your project's in the middle of nowhere. That couldn't be further from the truth. We've got a paved highway that runs right through our property to the town of Enchi. Enchi's got about 5,000 people, so it's got all the support services. It's got university campus. It's got a hospital. It's got ability for us to house all of our employees there. Sitting about 5 kilometers outside of town. This is our core shack. We actually recently just doubled it in size, given all of the success that we've been having from a drilling perspective. And, this is a good example of the infrastructure that we've got is, here's the road that you can drive 100 kilometers an hour along. There's the power line, cell phone towers. There's a half dozen gas stations scattered throughout our project. You drive 10, 15 minutes down this dirt logging road. You're standing on top of our Boeing deposit. Another 5 or 10 minutes from there, you're standing on top of our CUM deposit. So great infrastructure for us to leverage off of. Big project, 216 square kilometers in size. We've identified 25 targets to date, of which we've drilled on 9 of them, and only 5 of them make up our current resource. The current resource today, it sits at 740,000 ounces of indicated resource. So obviously that's important because those are de-risked ounces, arguably. And then another 970,000 ounces of inferred resource. We did put out our first ever underground resource. So that's a nice proof of concept for us in terms of the growth potential. When you look at these greenstone hosted deposits along trend, where they really increase in grade and grow in sizes as you drill deeper. We also put out our 5th resource area at Tokasea, which again, just highlights the growth potential that we've got on the project. As I mentioned, we did put out a PEA in 2021. It outlined very robust economics. We are in the process of looking at updating this PEA, given we have grown the resource and de-risked it further. So we think we could add to these numbers here. At a $1,650 gold price, you're looking at an after-tax NPV of $212 million, after-tax IRR of 42%. That compares to a US, call it $15 to $20 million market cap today. So trading at less than 0.1 times the NPV of the project. One of the
Luke,
things
what's if you, sorry, just cut you off there. If you were to use today's gold price at say 1950, what does that equate to from after-tax NPV?
So if we look at it at 1950, we've got it here on this sensitivity. At 1950, you're looking at an after-tax NPV of 347, less than a 2-year payback, and after-tax IRR of 60%. So one of the things, again, if you're buying a junior gold company, advanced stage exploration, you're looking for leverage to the gold price. So when we look at our base case, which I just talked about, obviously at 1750, 1850, 1950, there's very good leverage to the gold price from that perspective.
And as you find more ounces here, we're just looking at that chart you just had there? Are these ounces kind of front end loading and you're increasing the annual production, or are these in other areas that you'll come to after the fact and extending the mine life, but around the same annual production?
All of them. If we look at the 3D model here, for example, CUM is our largest deposit, sits here. Boeing is our second largest deposit, which, to give you a sense of scale, that's about 4 kilometers away, those two. Tokasea is our newest deposit. It looks like it could actually potentially merge right into CUM. So, these discoveries that we're making are all within, very close proximity of where the proposed heap leach pad would go, which is close to CUM here. NIAM, where we're getting some of those nice higher grades. I mean, that's the furthest away, and it's still only about 8 or 10 kilometers away. So it's a good question, and one of the key things is that all of the discoveries that we're making are all within very easy trucking, call it satellite type deposits.
Yeah, you hear a lot about sort of the hub and spoke model, but that can mean sort of hundreds of meters to hundreds of kilometers away, but 8 to 10 kilometers away is not. Yeah.
Well, again, 8 to 10 is the furthest.
Exactly.
If we look at Boeing and CUM, which are anywhere from 3.5 to 5 kilometers away, depending whether you're at the north or south, you're looking at about 90% of our, or 85% of our resource sits within those two right there. So again, that's the furthest one, NIAM, but it's a small percent of the resource today. So, I mean, I won't spend a lot of time on this, but where we've seen a bunch of the growth has come from stepping out along strike. If you were to look at this model here prior to the resource update, none of this area here would have had any pits around it, as well as we've been able to expand the resource areas along the edge. So what we're doing is typically we're just systematically stepping out along strike at these known resource areas. So here at Boeing, we just continue to step out along strike and ultimately look to chase these greenstone hosted shear deposits that just run north-south right through our overall project, which is exciting. I won't kind of take you through all of the deposits, but we do remain open along strike, so we are continuing just to step out, chasing those oxides, which obviously add to the mine life. But we were also very excited with the recent resource update that we put out, was to add the first ever underground at our project. So what we're looking at here is a long section of our Enchi project. We're then comparing that to the Chirano mine, which sits 50 kilometers to the north of us along the same Sefwi Bibiani belt, and would look very similar at Bibiani as well as Newmont's Ahafo project. And what we've then done is we've superimposed the depth of the oxide. So again, the average vertical depth of the pits on our project today is only down to roughly 70 meters. And when you compare that again to Chirano, Bibiani, other projects along trend from us, where you start to see them really grow in size and increase in grade is as you start to drill deeper and get into those sulfides. To put this in perspective, they're currently mining at 800 meters below surface, and they've drilled down to about 1.1 to 1.2 kilometers at Chirano. When I take you back into the 3D model now, and we look at this from a long view perspective, and we zoom in and have a bit of a closer look here, we've had some very encouraging high grade results. So 5.8 grams over 7 meters, 5.6 over 8, 5.4 over 9, almost 5 grams over 8 meters. So we think we've identified one of these high grade chutes that ultimately plunges at depth. What I'll do here, and Steve will like this because it's me playing with the VRIFY 3D model to ultimately highlight something, but what I'll do is I will take off the lower grade 0.15 material here at NIAM, and what you can see there is this is the higher grade material that we're seeing here in red. That's plus 1 gram material, as well as the kind of plus 0.5 gram material here in yellow. So pretty clear to see where you can see some of one of these high grade chutes that's plunging at depth. If we now look 500 meters to the south of that, again, real nice results: 3.2 over 9 meters, 7.4 grams over almost 8, 3.5 over 9, 6 over 6. So you can see again here, in red, one of these high grade chutes that's ultimately plunging at depth. And I can illustrate that even more by by taking off the half gram to gram material, and you can see that 1 gram plus material there. So this is the high grade that we're excited about. And if we zoom in here and look at one of these cross sections, one of the key things is we look at this hole 45, for example. Here's the nice oxide heap leachable material near surface. If we look at this hole 45, as we got down to that 150 to 200 meters, 5.4 grams over 9 meters. So still relatively shallow. So opportunity for us to continue chasing.
And do you have Luke, do you have a view on, as you get these higher grade, it's probably too early to tell, do you have a view on ultimately, are these pits going deeper, or the underground components, a combination of those two things?
Yeah, so some of the pits will go a bit deeper, and it really depends on the deposit. Sium, for example, it's a very wide deposit at surface, so we'll continue to push that one deeper. Slightly narrower here at Niam, but our view is we could push these down to 75, maybe 100 meters, and then you're easily ramping off the bottom of a pit, and you're straight into this 4.5 gram material over 13 meters within that 7.4 over 8. So in the grand scheme of things, we're still only down at kind of, call it 150 to 200 meters here. So lots of opportunity to obviously continue to chase this to depth. So that's something that we're obviously very excited about. So Steve, I know you had some kind of specific things you wanted to ask, and I kind of went into one sentence mode and gave you the 10-minute.
No, I know that mode very well. Just try and steal the mic from me once I get going. That's fascinating. Actually, I learned a lot about the project here. Yeah, it's interesting to see this underground element come into it too. Like when you talk about, I'm sure you go through this a lot as a $25 million company with sort of at today's gold price, a $350 million after tax NPV. It's fascinating to think of sort of like the value prop as it exists today, but there's also these other elements like expanding resources and underground components and all of that, and how all of that adds value to the story. I would assume that one of the most interesting things about your project that investors must be drawn to is just the capital intensity of the project. Like you're in this market where there's not investors with suitcases full of money not kicking your door in to invest in it. How much money it takes to build something and bring it into production is so much more important. Like seeing that sort of $100 million number to a $350 million after tax NPV feels like it's probably in something that comes across as, or I would assume, as one of the more attractive elements of this project. Do you see that as you go through and update studies and kind of add more resources and add more knowledge and all the work that you're doing? Do you think that capital intensity, will it always be sitting in that $100 million range, or how do you see the development of this project going forward, both in new studies and what this thing might ultimately look like?
Yeah, so it's a great point that you raise, and it is something we talk a lot about, and that a number of our institutional investors really find attractive about the project is we've got a huge amount of optionality. So there's a 5 million ounce, in my view anyways, a 5 million ounce plus deposit sitting here, and that just takes time to explore and grow the underground resource, continue to add deposits along trend at surface, all the rest of it. But one of the things that we've also got is we've got a project here that's 100,000 ounces per year. That's very economic, that we could bring into production ourselves. And one of the things that we often talk about is you look at projects around the world, and whether it's in northern Canada or at 4,000 feet in the Andes somewhere, there's huge capital to get a lot of those projects into production. $100 million for a road, $100 million for a power line, $50 million to build a camp. I mean, you're 250, 300 million, whatever the number is, into the project before you've even started to build the mill. With the infrastructure we've got, the fact that it's an oxide heap leachable project, it's very low cost to build, a heap leach project, and that's one of the big advantages we've got. The other, big advantages in Ghana, they are very pro mining and keen to see projects built and moved forward. So, from a permitting perspective, we're in the process of, getting the paperwork prepared to apply for a mining lease. Those are the kind of things that we think we can get done within a year. Met work, environmental baseline studies. I mean, all of that work we can get done in Ghana in a very or relatively short timeline when you start to compare it to other projects around the world. So yes, capital is a big advantage that we've got over a project, but also permitting and the jurisdiction that we operate in is, I would argue, another huge advantage for us at Newcore and our Enchi project.
Yeah, and infrastructure is such a funny one too, because it's not just a spreadsheet. It's not just a number on a spreadsheet. Having a highway through a project, there's the element of when it goes into production, it's so much cheaper because there's power lines and you don't need to have a big expense item of building a new road or power line. But the other element is actually getting it to the point where you can make a production decision is infinitely easier as well. Like we used to find that at our project in Val-d'Or, Quebec. We're 2 kilometers from the city of Val-d'Or. Similar to this, it's about 30,000 people, but you'd be drilling and you'd have multiple drill rigs going and you'd blow a valve and an hour later your rig would be fixed because they'd go to the shop, get a new part. And when you're in a remote location, there's other complications obviously that come when you're that close to a community, but when it's a pro mining or a pro development community that's supporting it, there's so many things or elements that really come play, not just from a financial standpoint, but just ease of kind of going through the process and the studies and the drilling and everything else you have to get there. Luke, I was actually really surprised to see just Ghana that high as far as 2022 gold production, that ranked that high in the list. I'd love to hear just a little bit about kind of given the sort of the impact that Ghana obviously has, or sorry, that mining, gold mining specifically has on the country's economy. I'd love to hear any specifics around the work you're doing with be it the community, government groups, everything else as you go to sort of establish Newcore's presence in this country.
Yeah, so Ghana, I mean, as I kind of highlighted, Africa's largest gold producer. I mean, you can see it here on the chart. It sits just below the U.S. and Canada in terms of total gold production, but it's got a very small land mass. I mean, for people who are familiar with Canada, it's about a third the size of British Columbia. So you've got 5 million ounces of gold that's being produced in a very small area. Interestingly, from a per square kilometer perspective, Ghana produces more gold than Nevada. So that's another, statistic that surprises a lot of people. And, as a result, there's a huge amount of very highly skilled labor in country. The mining sector and mining jobs are some of the most sought after jobs in country. There's 2 mining universities in Ghana, one of them in Tarkwa, one of them in Kumasi. So Ghana is actually an exporter of labor all around Africa and the world, as well as mining service companies. So given what a stable jurisdiction it is from a safety perspective, as well as politically, a lot of companies headquarter themselves in Ghana and then are exporters of their services throughout West Africa. So great jurisdiction for us to be operating in. And then I would just, also highlight, because it is such a good jurisdiction, you've also seen a huge amount of M&A in Ghana over the last couple of years. So, Cardinal got taken out by Shandong. To put that in perspective, they got bought at $90 per ounce in the ground. We're trading at about $15 to $20 per ounce in the ground today. They were more advanced feasibility, so it's not apples to apples, but obviously a lot of room for us to re-rate from that perspective. You've got Asante, who moved in and bought the Resolute Bibiani and Chirano asset. Golden Star got taken out by Chifeng. And then you've got a proposed, merger between or joint venture between Goldfields, and Anglo, which would create a 400,000 ounce per year, 900,000 ounce per year gold complex in Ghana. So, lots of kind of activity in country. And one of the interesting things you've got very large companies, some of the largest in the world. You've then got a few mid-cap producers, and then there's really a big void. We, with our project, are probably the second or third most advanced project in the country, from a resource perspective, from an exploration perspective, but then also that there's that fundamental underpinning of value with the economic studies that we've put out on our Enchi project. So a real gap there between production and exploration / development, which we think puts us in a very unique position to obviously, move the project forward from that perspective.
Yeah, that's really interesting because as like the extractive industries as a whole, you build teams, but you're depleting your assets as you go. So no matter what you're doing, it's not like other industries where you can kind of produce something forever. So if you have a lot of companies with producing mines and so on, there's a natural element of you've spent all this time and energy building these teams and investing in certain countries, you're naturally going to be looking for what's next. So it's whereas in a lot of other jurisdictions, like look, say Quebec as an example, you have lots of big producing mines. You literally have hundreds of sort of junior explorers as well. It's it's an interesting dynamic I hadn't heard of. Luke, just moving towards the end of it here, I have two questions for you. Specifically, I'd love to hear about any challenges, obstacles, anything specifically that comes to mind, and sort of your plan to approach that. I know we talked about just capital markets in general, maybe either expanding on that or anything specific. And I'm going to follow that up with sort of if investors walked away from sort of one takeaway from this interview that they need to know about Newcore, what makes you unique, separate, like what do we need to remember in the coming months? What would that be? So two-part question, back to you.
Yeah, so I mean, I think we've talked about it at the start of this interview in terms of the market has been challenging over the last couple of years for exploration stage companies. So access to capital has been a challenge, and then obviously dilution as a result of raising money at depressed levels is always something that's challenging. We're fortunate that, again, we've got very strong institutional backing who remain supportive of what we're doing. We've been able to bring in a couple of new deep-pocketed, value-focused institutional investors on this recent raise. And then management and directors, we continue to invest into the business. So that's how we've kind of dealt with that challenge. Allocation of capital is another thing that we see as a challenge / opportunity. We could drill another 1 million meters on this project and still have more drilling to do, but obviously we've got to decide how we allocate capital in terms of whether it's deeper drilling, oxide drilling, as well as economic studies. So we're fortunate to have all of those options for us. And then, it's a matter of us deciding where we think will create the most return for shareholders from that perspective. And our view is by moving all of those things along in tandem is where we'll create that value. I think the second part of your question was just in terms of what kind of potentially differentiates Newcore and how how investors should look at Newcore. I mean, I think one of the big things is, myself, the rest of the management team, board, we're all aligned with shareholders. My average cost base is about 50% above where the stock is trading today. And that's all money that I've invested into the company because I see the tremendous opportunity that we've got with our Enchi project, as well as the rest of our board members and management who've also invested into the company. So true alignment from that perspective. Very strongly backed, again, by the capital markets, investment banks, as well as deep-pocketed institutional investors who recognize the tremendous upside that we've got within our project. And then, valuation today. I mean, again, when there's blood in the water, that's the best time to be investing. And if you look at where we're trading today at less than 0.1 times the NPV of the project that we outlined at a $1,650 gold price in 2021, and trading at, you know, $15 to $20 per ounce in the ground, you know, that obviously creates a tremendous, in my view, buying opportunity, you know, for investors. And then lastly, you know, back to this slide that we've got up here, Ghana is a sought after jurisdiction to be investing in for corporates. And, you know, us with our Enchi project as one of the few opportunities in the junior space, you know, creates a unique opportunity from that perspective as well. So strong management, well backed by the capital markets in a tier 1 jurisdiction, I think would be the key things that I would point to.
Luke, appreciate it. Thanks for taking us through that today. The interactive content looked amazing. Yeah, well, I appreciate you taking the time. Look forward to watching Newcore continue to grow.
Absolutely. Thanks a lot, Steve, and enjoy the rest of your summer.
Yeah, you as well.